Hey, welcome. Today, we're diving into something that, let's be honest, can feel pretty intimidating: Philippine income tax. But what if I told you there's a surprisingly simple map to understand it all? Well, there is, and we're going to walk right through it together. Let's get started. When you think about taxes, does your head start to spin? It can feel like this giant, complex maze, right? All these confusing forms, weird acronyms, rules that seem to change all the time. If you've ever felt totally overwhelmed by it, trust me, you are not alone. But today, we're going to find a clear path through all of that. And here it is. This is the secret, the one core idea that simplifies everything else. The absolute key to navigating the entire Philippine tax system is understanding one thing: where your money comes from, the source of your income. That's it. That one idea is the compass for our entire map. So our map is built around these three main income buckets. Just think of all your earnings as fitting into one of these three. First up, you've got the paycheck. That's for employees. Second, your own boss. This is for all the freelancers and entrepreneurs out there. And third, money on autopilot for things like your investments. Ready? Let's explore that first bucket. All right, let's jump into bucket number one, the paycheck. This is probably the most common path on our map. It applies to pretty much anyone who earns a salary from an employer. So what exactly is compensation income? Well, it's basically any money you get from having a job. We're talking about your salary, your wages, any commissions you earn, bonuses. Essentially, it's the reward you get for working for a company. Let's picture this. Meet Addy X. He's a lawyer at a firm and he's making 40,000 pesos a month. Now for him, the tax process is incredibly simple. His law firm does all the heavy lifting. They calculate his tax based on the official tax table, they withhold it from his paycheck, and they send it to the BIR for him. He doesn't have to lift a finger. It is by far the most straightforward path on our map. Okay, now let's move to a completely different part of the map. Bucket number two is for everyone who is their own boss. We're talking freelancers, doctors with their own clinics, online sellers, you name it. And this is where things get really interesting. Because, see, unlike employees who are kind of locked into one set path, if you're self-employed, the tax system gives you a choice, a really, really important choice. You actually get to decide which tax plan works better for you. And believe me, that decision can have a huge impact on your bottom line. So what are these two paths? Think of it like a choose-your-own-adventure. The default path uses the graduated rates, just like an employee, but the tax is on your net income. That's your total sales minus all your legit business expenses, like rent and supplies. The other path is a super simple, optional 8% flat rate. Here, the tax is just on your gross sales. No need to track every single expense. So the question is, do you want to be taxed on your profit, or do you want a simpler life and just be taxed on your total sales? Let's make this real. Take a look at Dr. Yai. Her clinic earned 2 million pesos. Great. Now, if she goes with the graduated rate and has, say, 1 million in expenses, she's taxed on her 1 million peso profit. But if she picks the 8% flat rate, her tax is a straight 140,000 pesos. As you can see, which option is better depends entirely on how high her business expenses are. This really shows you the power of that choice. Okay, on to our third and final income bucket on the main map: money on autopilot. This covers all the income that you earn with very little active effort. Think interest from your bank account or dividends from stocks you own. Now, the magic of passive income is that it's subject to something called final withholding tax. This just means the tax is taken out before the money even gets to you. The bank or the company paying you handles the tax for you. You get the money net of tax, and the best part? You don't even have to report it on your annual tax return. It is truly automated. So what's the magic number you need to remember? For most types of passive income, it's a flat 20%. This applies to the interest you earn on your peso bank accounts, most royalties, and any prize you win that's over 10,000 pesos. It's a simple, clean, final tax. Done and dusted. But wait, there's a special discount, a lower rate of just 10%. This is kind of like a special deal for things like cash dividends you get from a local company. And interestingly, it also applies to royalties from books you've written. It's the government's way of encouraging you to invest in local businesses and to support the arts. Here's a perfect example of how this works. Let's say Miss Z wins 100,000 pesos in a mall raffle. Awesome, right? Well, since that prize is over 10,000 pesos, that 20% final tax kicks in.
The mall automatically withholds 20,000 pesos for the tax and just hands Miss C a check for 80,000. She can just cash it and celebrate. It's all taken care of for her. Easy peasy.
Okay, so we've covered the three main income buckets, but our map has one more place we need to explore. Let's call it a special zone. This is for when you sell a major asset, like a house or some stocks. In here, the rules change all over again.
The most important question you have to ask in this zone is this. Is the thing I'm selling part of my business, or is it just my personal stuff? That personal stuff, anything not used in your business, like your family home, your personal car, your jewelry, that's what the law calls a capital asset. And believe me, this one distinction changes everything.
And here's why that distinction is such a big deal. If you sell a business asset, what the law calls an ordinary asset, the profit you make just gets added to your regular business income and taxed normally. But if you sell a capital asset, that profit gets sent to its own separate special tax world with its own rules called capital gains tax, two completely different universes.
This example makes it crystal clear. Imagine a piece of land in Taguig. If a real estate developer sells it, that land is their inventory. It's an ordinary asset. The profit gets taxed as part of their business. But if a family sells that exact same piece of land where their home was, it's a capital asset, and it gets hit with a flat 6% final tax on the selling price. Same land, different purpose, completely different tax. Wild, right?
And even within this capital asset world, there are different rules. If you sell shares of a private company, that's a 15% tax on your net gain. Sell a house or land, that's the 6% final tax on the gross price. But, and here's a weird one, if you sell other personal things like your car or jewelry for a profit, that profit actually loops all the way back and gets added to your regular income tax return. So you always have to ask, what kind of capital asset am I selling?
Phew! Okay, so there you have it. That's our simple map to Philippine income tax. We've navigated the main roads and we've explored the special zones. Now let's just quickly pack our personal tax toolkit with the most important takeaways from our journey.
So let's boil it all down. For your paycheck or compensation, it's the simplest path. Your employer handles it. For business income, it's the path of choice. You've got to make that strategic call between graduated rates or the 8% flat rate. For passive income, it's the automated path. The tax is paid before you even see the cash. And for those big asset sales, remember it's the special path, where the asset's purpose, business or personal, is absolutely everything. You know, at the end of the day, what we've learned here is about so much more than just taxes. Understanding where your money comes from, how the system sees it, and how it's treated, that is the fundamental first step to taking control and truly mastering your personal finances. It lets you make smarter decisions. So that maze might still have a few twists and turns, but hopefully it doesn't feel so scary anymore. The big question is, now that you have the map, are you ready to confidently navigate your own financial journey? Thanks for joining me for this explainer.